The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, if you have any questions, it's 877-927-6648. I want to remind the folks that are subscribers to the newsletter, my newsletter, that on May the 5th at 6:30 Eastern Time in the evening, I'm going to do a one-hour webinar, and I'm going to be focusing on two particular trades that I think have a great deal of long-term potential. One is in gold, and the other will be in Treasury bonds and Treasury notes. Those are the ones that I'm watching the closest. Also, the stock market. Those are the three that I want to look at for a longer-term perspective. I think you'll get an idea of what I'm looking for in the market when we finish the show today. But it'll be interesting to see some of these patterns unfold. That's the real key to what we're looking at here. Now, I want to start the show by basically looking at the thing that came by one of our subscribers sent it to me, and I think it's real interesting. It shows the statistics behind work done by Walter Zimmerman at United Capital, and it basically shows the statistics that if you bought in May and went away, or sold in May and went away, and then if you just stayed out of the market, it's really an amazing statistics that this has been all over the internet, by the way, in a lot of different formats, but it shows that this is probably the strongest of all seasonals that we have. It's even far, far stronger than the January seasonal, where you buy in January, the January effect. The sell in May and go away goes back a long, long time. The study that they did here went back to 1950, and it was really quite amazing. But the most amazing part of the statistic was the fact that if you would have bought in May and held through November, you actually had a negative return. The net loss would have been on a $10,000 account since 1950 would have been a loss of $1,251 as opposed on $10,000. But if you'd have bought in November, December, and then held it to May, the gain was almost $1 million. 100-fold. So that's really a tremendous statistic, in my opinion. I think that you have to, really, really pay a great deal of importance to it because, this goes back many, many years, and it's also, we see it happening. I mean, what am I to tell you this? Anyway, I wanted to put in the time frame since when I started doing this radio show with TFNN. It basically goes back to 2007, and it shows the highs that were done in May. Now, we have, there's a total of 7 of them here, and with the exception of the bottom from 2009 when we had the May correction, didn't happen until July, but all of the others were very close, to a major top. And if you see, these were considerable, especially the one in 2008 and 2011. The one in 2012 only made a 382 retracement, and of course here we are now, and we're completing these, ABCD patterns, just about everywhere. So it's an amazing statistic. So I just can't understand why, and I know it looks great, but I don't understand why people want to be buying, the bonds, want to be buying the stocks at this particular point. So, we'll wait and see. But sell in May and go away is one of the strongest seasonals that you can possibly have. I'm going to put into Tiger TV the Bradley model. This is the inverted model because we've been going up, since December. And, we are getting close. At the end of May is when the turn is supposed to come in the Bradley model. And whether, it hasn't been working very well. It only works about 70% of the time anyway. And, it has not been nearly as accurate as it has been in the past, just based on, what's been occurring recently. Now, I'm going to cover some of the broad parts of the market here because, we've had some real significant things happening here. We had the, that Dow Jones Transportation Index finally, took out that the little wedge that was there and went up to the. Looks like it's made pretty close to a double top. We don't know yet. It's got to get above 6,300 in the Dow Jones Transportation, and then you'd have a pretty good chance of saying that this is going to be another complete leg up, and we'll know more when we get to that point. But the most the really amazing one to me is, given the fact that all this bullishness and everything that's been going on, is we have just made we're making higher bottoms now in the VIX index, and that should be an ominous sign, if you're long stocks, because I know they write off the VIX index all the time, but this little thing really does a pretty good job at giving you overbought and oversold. We already know that there's so many people bullish. It's as high as it's been, I think, since 2000, going back 13 years. The bullishness that's in the market, and whether this is going to be whether it's going to turn. I know that when it does turn, it's going to be very nasty and to the downside, because that's what history says it's done, and nothing ever changes in the markets. The only way you can determine what the market is going to do in the future, is to look at the past. That's the only way that you can, possibly look at that. So that's the main thing that you want to be looking at what we're following here. Now, if we take a look at the long-term NASDAQ, if we go back just over, the last, we'll just look at the weekly chart over the last 18 months, and you'll see that we're making a really nice three-drive to a top pattern, with each of the swings being nearly exactly 1.27, and they are very, very close to the exact numbers. We're looking at around 29.50, in the NASDAQ, and that's exactly where we're trading right now, 29.50.80. So we'll see, if this is going to be the key. Someone asked me the $64 question about Apple. I don't think there's any question now that the Apple has made, a very significant bottom. We're up $10 again today, and like we always thought, the first objective was, of course, at $4.42 a share. We're going to cover Apple, of course, soon, but it's still got a little ways to go. I think we're going to eventually see Apple at $5.15 and possibly even higher, because we've come out of here so very, very strong. That bottom that we're looking at around that 394 level has held up. We did have the exact date there. All we did was we looked at the AB leg number of days down and the CD leg and the number of days down. They were perfectly equal. The price measured to 386 a share. It went to 384.5, I think. So it was very, very close at that point. But this is we think it's got a chance to really go higher. But I want to cover the first part of the show today. I want to cover the stock market in general, because I really believe we're getting very close to one of these places where you're going to look back and say, oh my God, why didn't I sell it there? But we need to look at the Russell, because unlike the NASDAQ, the Russell is making a butterfly pattern. The NASDAQ is making a three-drive pattern, and the Russell is making a butterfly pattern, which is nothing more than a failed Gartley pattern. In other words, the CD leg, instead of stopping at 618 or 786, goes on and makes a 1.27 or 1.618 expansion. That's what we're watching. Someone asked me a question about the lunar cycles. The lunar cycles have worked, but they only work for just a couple of days. We had solar and lunar eclipses last month, and they only lasted for a few days. There was wild action around those, but they didn't react too much. Now we have another eclipse due on the 10th of this month, and then we have another one due on the 25th of this month. So on Friday, we'll be talking about this on Thursday's Commodity Show, but we have another eclipse coming in, and I believe that's the another lunar eclipse, and the solar eclipse will come in on the 25th, as I recall. So these are things that we will be watching, and we'll keep an eye on it. The thing that when markets are, this is, I'm getting confused here a minute. Someone asked a question, is this like 1999, 2000? No, folks, it's not like that at all. This has been a very, very orderly market. It really has. I mean, we had a wonderful bottom form around Christmas Eve in January. It was right at a 61% retracement. We had a lot of things turning the market at that time, and the market gapped up and had one of the biggest, opening days ever. It left a huge gap of 20 S&P points that day. So it's really a point where you want to be able to, say that this thing is, had great legs to stand on, and it certainly exploded, to the upside. I remember when we were looking at the bottom in March of 2009, I said at that time this was going to be probably the biggest short covering rally the stock market has probably ever seen in its history, and it certainly has done that because we've made new highs. And now I've been saying, for several months now that just to be careful, and the market is up, and but the big bulk of the move, happened, right after January, during the January-February run. That was the big run, January, February, March. As soon as we went above those numbers, it said pretty much that you wanted to go, to a much, much higher level. That's, the main thing that I'm watching to look at. And if this is a, big bull market, and I'm not so sure that it is on a, longer-term basis, then I have to be real careful because it keeps making new highs, but, it's not a crazy new high. This is just a normal market. People say that it's controlled by the Fed. Frankly, I don't know if that's true or not, but we don't know for sure. I wanted to post into Tiger TV the relationship between copper and the stock market, and you can see that this relationship that we've been talking about for a very long time has, broken down a great deal. Now, we've had a really strong move in copper. We've rallied almost 25 to 28 cents a pound from that really strong support that we had down there at $3 a pound in the copper, but it's still lagging the stock market. I mean, copper would be trading at $4.30, $1 a pound higher. It would be trading 30% higher than where it is now if it were following the stock market. So just I really believe this means something. It hasn't reared its head yet, but we'll have to wait and see if that's going to be the case or not. So that's a lot of factors that are coming together that I think are what I think are relatively important. After we're going to be doing a break here in just a very short order. One other question is that if you were still long the Apple, buying the June 400 calls that were trading at around 22, they're in the money by $60 now. So, what I would do is I would move your stop that if the calls got down to $30, I would go ahead and, take the call off if it did that. I'm looking for a correction in Apple. I don't know if it's going to start today or tomorrow. I originally thought that 440 to 450 level in Apple was going to be some resistance, but with this gap up today, that tells us that the interest is coming back, and any pullback that we get is probably going to be in the 382 level. Okay, we've got to take a break here, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we were talking about Apple, and we might as well do a little bit of segment here because the stock has been acting pretty nicely. But let's take a look. We watched how it came down in the AB leg, X number of days down perfectly. The CD leg, X number of down days perfectly, right on the date of April the 19th. The price that we were looking at was originally $3.94, but when we went down to the hourly chart, that came in at $3.87. The low was just under $3.85, I believe. Now, you have to ask yourself what happens in the past. Most probably will give an indication of what happens in the future. So Apple's had, since January, Apple has had several rallies that have lasted about 10 to 12 days. The first one was in January. The next one was in March. It lasted about 17 days. And the one we're in now is in its 11th day. So sometime this week, and remember, we have an eclipse due on the 10th. That's Friday. And my assumption is because it's so strong, any buying coming in now to Apple is going to be have strong support. And the reason why is this move is different than the moves that we had in January and March. And I think the reason is that major pattern that we were looking at down there, that large ABCD on the weekly, is definitely, landed. So what we want to do now is we want to watch for when the first correction comes. And believe me, it's still in the bear market, and the shorts are still a little bit scared, not as much as they're still scared, but the longs aren't as scared as they were before. But remember, these people that bought this stuff last August are still, underwater by about 40-some%. So what we want to do is look for a 38% retracement in Apple. And 38%, for where we are now, is about $15 to $20 a share. So we don't know when it's going to come, but nothing goes straight up. We're in the 11th day of a run, and we gapped up again. That makes the 1, 2, 3. That's the third gap up since the bottom on the 19th. our price objective on the whole thing, from when we were looking at that call at 400 was that 400 January call was $512 a share. That was a 382 of the whole move down, and it's also a 1.27 expansion of the move since February. In other words, from February down to April, if you multiply that times 1.27 and add it to the bottom, that gives you the same price as that 382, which is 512. That was the original, one that we're looking at. It still has a month to go, I believe, in the option, so it could certainly make it. If we ran $80 in a matter of 10 days, we can certainly do another $60 in another 10 or 20 days. So it's got a lot of power behind it, and it's telling us that we are looking at something better. So I don't trade this stock. I did a little down there, of course, but most of it I got out. I got out of the last. I'm still in part. I still have some of it, but the 2/3 of my position I was out around the 440 to 442, and quite happy at that level. As a matter of fact, even though it's $20 higher than that level right now. So that's what I would be looking at, is to hang on and see if it's going to take a look at it. Now the question that somebody asked me, and I'm going to cover it when we come back from the longer break, and that is we're going to take a look at these gold stocks, because I really think that gold has had something very significant happen back on April 15th when we made that big ABCD pattern. We've been following it on the way up. We talked about the 1480 level, how important it was, that it was not going to run through there without too much trouble. There was some resistance there. So far, that is the case, but we need to look at some of the gold stocks, because they're beginning to show signs of life. Now remember, folks, when we were talking about Apple, the stock market was going straight up. The stock market's still going straight up, but this time they're pulling Apple with it. So even if the stock market backs off, that doesn't mean that Apple can't, have a pretty good move. Even on the few corrections that we've had, and they've been very minor in the stock market over the last few days, Apple has still gone higher because it's been up every day. I think it's closed higher every day for the last 11 days, I believe. So, or close to it. We've either made a higher, closed higher, ever since that time. So we have this is the short segment here. So when we get back, we're going to take a look at the gold market on both a short and long-term basis, and we want to look at the gold stocks, particularly American Barrick, and which is the largest of the U.S. gold producers, and we want to watch that very closely. And we also need to look at the second part of the show. We'll be talking about the currencies. I know I put the dollar index in the first chart today because the king dollar runs the world. But I want to give a really have to do it at the break. Anyway, listen, I'll be back 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to talk about gold right now. I posted into Tiger TV the scenario that we were watching when it was happening because, the gold was just not acting well after the thing with Cyprus. The rallies that we'd had on the weekly chart were, the 3 and 5 week rallies were minuscule. They were only like $60 or $70 an ounce, and once we broke 1560, that was the key because once we had broken down below the April lows, that signified, that something more sinister was coming. Of course, you don't know that it's going to drop, 200 and some dollars an ounce in a matter of 3 days, but that extended itself. Now, since that time, we have completed this ABCD pattern that we've been talking about on the show. We made the AB leg. We pulled back exactly to the 382 retracement down at the 1390 level, and that took us up to the D level at the 1480 level that is not broken down from since. So the retracement that we'd be looking for in gold now would be to see it pull down to the we've rallied $160 from the bottom, from 1322 to 1480 and change, so that's $160. Very simple. You multiply that times 0.618, and 160 would be 100, so $100 a share would take you down to about 1480. Excuse me, 13. Let's try it again. 1380. 1380 would be the 61% retracement, and I would certainly be, wanting to be look to be a buyer of gold at that point. Now, there's an interesting thing that happened when the market made the low down in October. Excuse me. That was April 15th. From the high we made at 1932 per ounce way back in August of last year to where we came in at the low, that was a 33% retracement. In 2007 and 2008, when gold was in that $600-800 area, we also had an exactly 33% correction. They were almost to the exact penny. The difference is this time we came out of here very, very fast. I mean, this move of $160 is very, very, it's impressive, especially if you're, a gold buff. But, I'm not saying that I am, but I am because I've had gold coins forever. I continue to own gold coins. I will go to see, I don't get to take them when I leave, but at least my, my kids will have them. But gold and silver coins, I've just been interested in ever since my college days because that's what got me started, doing, this whole thing in commodities. And that's, why I do it, because it's so much fun. Now, we need to take a look at American Barrick because, it's going to be a real interesting one to look at here. I've got to get it to make sure that I'm able to put everything together. There we want to do. Oh, I want to put the weekly gold chart up just to show you the importance of that low and the fact that we've come out of here so very strong. It also shows the 2008, 2009 bullish Gartley that formed down there. That was a 33% move off the high from $1,000 a share down to $7 and change. I think it was $688 was the low that time. And from this time, from August of April 2011 to where we are now, that also was a 33% move off of the low from 2009. So there's a lot of symmetry here. The difference is that we came out of this bottom here incredibly fast. I mean, we really exploded out of here. So that tells us that the long-term structure, in the gold, still looks, very, very, very good in my opinion. Now, one of the stocks that we follow, which is the largest gold stock, of course, is American Barrick. And if you go back and look at this stock from 2008, it had a rally from 18. It, tripled in price up to 55. And now we've come down and we've made a double bottom with a big, AB equals CD pattern down here at this $17 level. We've had a little bounce off of that. So we want to be watching, to see what some of these gold stocks do. For those of you that trade the gold stocks, is to watch it, because I think we've got a better than even money chance. I think it's about a 65% chance that we are looking at something, pretty bullish, in the gold market. Now, silver is actually doing a little bit less than what we're looking at in the gold market. So we will That is not Santa Claus coming, folks. That's my private cell phone. One of my kids is trying to get in touch with me. Sorry about that. I forgot to turn it off. Anyway, the silver is still acting, far, far weaker than gold. It's had a little bit of a bounce of about 10%, but, gold had a heck of a bounce. It moved, a lot more, so it was, a lot easier, to see it. Silver is much harder to trade. It's 1/6 the liquidity of the gold market. So this is why I recommend people, if you want to trade a precious metal, trade the gold market. It's real easy to trade. You can look at it on a 30-minute chart, a 5-minute chart, and you don't have any, wild gyrations, to really deal with. So that's the main thing. Now, I want to switch over now and start talking about what I think is going to be a real interesting market here. And this is the bond market. I'm going to start with the high yield, i.e. jug bond markets, and it basically, this chart shows the going back the last 18 months, and it gives the fact that we're up at this 1.27. I use the HYG as the ETF for looking at the high yield bonds, but there's also another one called Junk, JNK. That's another one that's very, very good, and I think it has a little bit more volume than the HYG. So the spread that we're having between the bonds and the 30-year bonds, the junk bonds and the 30-year bonds, is just absolutely unbelievable. I mean, it's just really really amazing. Now, the next one is the one that gives me the most trouble at all, and that is the Treasury bonds, because, folks, I think I've missed the high point up here. I was looking at 150, and we got to 149.18. We missed it by a couple $100, and we've had this big move down, on Friday, and we're having another, move down today. So I think that the bond move has started to the downside. What another further example of that is if you take a look at the Treasury notes, which on the daily basis, and the notes are 3 times bigger than the 30-year bond. The notes is where they get the mortgage rates from. These are instruments that are 10 years and under. Usually from 5 years to 10 years, they're considered the notes. Bills are 1 to 3 years. They have others between 3 and 5 notes, but notes are basically anything under 10 years by the government. That's how you come up with the interest rates on your credit card, interest rates on the mortgages, and the mortgage rate on a 15-year mortgage went to 2.65% on Friday. I happened to be, watching that, and it was really amazing because we were getting ready to get a house for one of the kids, and I was shocked to see that you could get something that I don't know anybody that I would loan money for at 2.65% for 15 years. I mean, I can't imagine that. The risk there is saying that there's not going to be any inflation and there's not going to be any surprises. How can anybody be that naive? Am I not seeing something here, folks? I mean, this is common sense, for God's sakes. I mean, no one would, lend that kind of money out. But the whole rest of the world is doing it, so you have to respect it, is my opinion. So that's all I can see. So we'll know from that level is whether we're going to be right or not. But we have some opportunities coming. It's not going to go straight down. Interest rates are not going to go straight up from this level. So we certainly don't want to. Do that. Now, when we were on the show last, which was last Thursday on the Commodity Show, and also on our show on Wednesday, we were talking about the British pound, making this beautiful Gartley pattern that had formed up at the 1.56 level. We've hit that now. This was the third day in a row that it hit the exact price. It is, is really came exactly where we wanted to come to. We're now about a half a point lower. We're about 50, 60 basis points, 50 pips lower in the British pound. So this pattern is working. This pattern is a perfect Gartley sell pattern. It might not work, but it's a perfect pattern. You have an ABCD pattern. You have a 3-drive pattern coming together at the same time. They all come together at the 50% level, and that's what that's what it looks like. And the first profit objective on this would be about 200 pips from where we are right now. So this trade has started to work now. If the British pound rallies and goes above the 156.30 level, that would constitute taking a loss of $200 and getting out of it. But if it works, it has $1,000 potential, and and we'll see if it makes the potential or not. But it has $1,000 potential with a $200 risk. That's an ideal 5-to-1 risk-reward ratio. You don't get to see those, very often as usually when we're doing these anyway. Now, we talked about the dollar index when I first put it on the show. I want to put it up again so that we can really look at this, because this is the key to many of these markets. This is a beautiful symmetrical pattern that we have going here, because you've had an ABCD retracement that stopped at the 382 level. It rallied up to the 786 and then came down to the 50% level at that 8150 level. As long as the U.S. dollar index can stay above 8150, it is in a very, very strong bullish trend, folks. We got up to the 83 level, which made the big ABCD 786 retracement. And now what we're looking at is the fact that we're getting ready to possibly make another leg up. And anything above 83 says this market can go to 86, without even batting an eye, in my opinion. Now, one of the trades that we were also talking about last week that we put on in the 99.40 level was the U.S. dollar versus the Japanese yen. And what we were doing was we were looking at the dollar, the U.S. dollar versus the yen, and how it relates to the Nikkei stock market, because it has a correlation of better than 90%. By the way, I want to really give a plug here because I happen to get a demonstration of the new art of the charts with Tom O'Brien stuff that David White has done. This thing is just absolutely amazing, folks. I don't know how it works because I don't do stocks, but if that thing is half as good as it looks on the demo at $59 a month, they're giving it away. I mean, it's really an amazing program. It actually will search for Gartley's for you and find them for you. I mean, and I don't know anybody that does that. And this is Gartley's. That's the bread and butter pattern of all this stuff. So take a look at it. I mean, I would really kick the tires on this. I'm probably going to even do it myself, because I don't do stocks, and I'm rather busy with everything else. But this pattern, if this software works like this on stocks, I know it'll work on Forex and futures. So Tom and David have really done an incredible job. The demo that I saw was really spectacular. And if you have an interest on how these patterns work, I'm going to be doing a webinar for my newsletter subscribers on May the 15th at 6:30 p.m. And that's the end of the commercials for the day. But that art of the chart looks really awesome, folks. That's the bottom line that I can see. Now, last week on our it was on the Thursday show, Mr. Zita, John put a chart in here about gasoline futures, and we posted that chart when it was trading at $2.70 a gallon, and the gasoline has exploded, more than 12 to 15 cents a gallon in a matter of 3 trading days. So my hat's off to John on that incredible pattern that he saw coming in at the 786. It was really a really good spot to take a look at the gasoline at that particular spot. So we're watching it very, very closely. Now, the next one that I wanted to talk about, I have to mention the corn market, folks, because I know our show's not till Thursday, but we've got some exciting things happening there. We're going to have Rich Anderson on the show on Thursday because these corn is really moving around. We've got July corn going crazy, and we've also got the they're going up and down. I mean, every time that rains, it goes up. Every time the sun comes out, it goes down. This is ideal because this is what happened in 2012 in May, and this is May. This is where we're supposed to be. So this is the category of what we're looking at. So we got to keep a real close eye. We're going to cover that on Thursday, for sure. And that's the other one that I want. I wanted to someone asked me to check on Newmont Mining because that's been one of the ones that we've been watching for quite a while also, and we'll put that. I'll try to get the longer term chart of Newmont in here, and we will take a look at this. I'm really excited about what I've seen with the thing with this art of the charts, folks. It's just really quite amazing. Now, when you take a look at Newmont, you're going to, I'm going to put this in here, you're going to see that it stopped at the 61% retracement, way back in February. It didn't hold there, and, it had a big wide-ranging down. Told you that you'll have to take a little break. But anyway, we'll get back. We're going to finish up with Newmont, and then we have to do the usual caveat with some of these other things.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we've got a caller from Toronto, Canada. Michael, are you there?
Yeah, hi there, Larry.
How are you? That's my wife's hometown. She's a Canadian citizen, and, well, her hometown's Tucson and Hong Kong, but she's lived in Toronto for a long time. What can I do for you, my friend?
Yeah, hi. It's regarding crude oil. Did you get a chance to take a look at the latest Commitment of Traders report?
I don't follow that report. The guy that does the best on that is Peter, I can't think of his last name. Boy, he's really good at it. Peter Brandt. He's very good at that, and I don't really follow it because by the time that report comes out, I'm probably out of half of my positions, that I put on because I don't like to risk very much. But this chart that I'm looking at, this DTO, what is DTO?
It's the inverse ETF for West Texas Intermediate Crude.
Okay, so that tells me that if it's the exact opposite, it looks like crude oil is getting ready to go up. Is that correct?
That's why I'm calling you. So on a scale of 1 to 10, how believable is this recent crude oil rally?
I think it's pretty believable because you went down from 85 and you got up to 97 pretty fast. Mm-hmm. You know what I mean? 85 was, we were watching that number on the commodity show, 86, 85, we got there. And in a matter of, 8 trading days, you were back up to, 10 trading days, you were back up to 97. You still haven't given much of it back, just to, $2. So it certainly looks believable to me. And look at gasoline. Look at gasoline. Last Thursday, John Z in the room, was talking about that. We brought it up at $2.70 a gallon. Now it's in the 280 area. So forcing 280. So this tells us that something big has happened.
you think there's going to be like a Memorial Day rally in crude oil?
Yeah, well, this is the seasonal. There's a very strong seasonal for oil, prices to go higher through the summer because of vacations and stuff. And with the economy, booming like everybody says it is, people are probably going to be taking their vacations and, using more gas. All I know is the gas here in Tucson has gone from $3.63 to $3.13 in the last 2 weeks. So I keep my mouth shut. I don't say anything,
In Toronto, it's $5.25.
Yeah, well, it's cheap compared to Europe. And in Hong Kong, you can't. No one drives cars over there except the elite because it's so cheap to go anywhere. But you're right. We're very fortunate to have cheap prices here in the United States with gas and stuff. So
yeah, I converted my car to propane.
You did? I've got a bicycle, so I don't even have to worry about that. Everybody would laugh, but if I rode a bicycle, it would be to Taco Bell. That would be about as far as I would get. Is anything else I can help you with, my friend?
Thank you very much.
All I can tell you is this, Michael, if crude gets above 100, well, actually, all it has to do is get above 98 now. If it gets above 98, 106 will be a heartbeat away. I mean, it literally could do that. But it's got a lot of resistance at 97. I don't think there's any question about that.
I think the entire move is geopolitical.
Well, that is the geopolitical market of all time because you've got the people in the Middle East control so much of it. That's the gosh, when I first started looking at crude oil, it was $2 a barrel back in 1972. Gold was $80 an ounce. I wonder whatever happened to those days, but who knows?
Yeah. Any idea when the Obama administration is going to make their announcement on the Keystone XL pipeline?
Yes, it's going to be in 36 hours, 11 minutes, and 19 seconds. You know what, Michael? They have never consulted with me on anything before or since, so I have no idea. I really don't know.
Do you think it's factored in? Do you think it's already factored into the price of oil?
I think so. I really do. So we'll see.
Okay. That's okay. Fair. Thank you very much.
You bet. By the way, folks, the next radio show coming on is Daryl Martin in Diagnostics Trading Hour, which is really good. He's a really smart dude, folks. He does the stuff with these binary options, which is really new, but I think you're going to, really like it. Just remember, if you take the newsletter, take a look at these long-term patterns, look about the statistics that is there with the sell May and go away. If you remember, it was
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.